the world order which is moving back and forth between regulation and deregulation. It is important to understand how dangerous deregulation could be. Deregulation assumes self-regulation, but when greed supersedes self-control, it results into accidents. Today, we will be learning about another such accident, the rise and fall of FTX crypto exchange. Welcome to Intelligent Investor, your place to gain knowledge. FTX is a Bahamas-based cryptocurrency exchange. The exchange was founded in 2019 by Sam Bankman-Fried and Gary Wang. At its peak in July 2021, had over 1 million users. It was the third largest cryptocurrency exchange by volume. In July 2021, FTX raised $900 million at an $18 billion valuation from over 60 investors, including SoftBank, Sequoia Capital, and other firms. In January 2022, FTX raised $400 million in Series C funding at a $32 billion valuation. Currently, FTX is in Chapter 11 bankruptcy proceedings in the U.S. court system. FTX was unable to meet the demand for customer withdrawals. Sam Bankman-Fried, popularly known as SBF, resigned as CEO of the firm. John J. Ray III became the new CEO. Ray in 2001 was the CEO of Enron and oversaw its liquidation during its years in bankruptcy. So, what went so wrong so quickly in FTX? Let's understand how the events unravel it. Listen to these events very carefully, as each has connection in future story. SBF was born on the 6th of March 1992 on Stanford campus to a Jewish family. SBF graduated from MIT in year 2014. He initially started working in Jane Street Capital, a proprietary trading firm. In 2017, SBF started his own trading and research firm named Alameda Research. In 2019, SBF decided to start a crypto exchange by the name FTX. FTX is a cryptocurrency derivatives exchange. He also launched its own cryptocurrency by the name FTT. Changpeng Zhao, Binance CEO, popularly known as CZ, invested in FTX in early stage. Binance is largest crypto exchange. By 2021, FTX became third largest crypto exchange with 1 users. TX raised money from marquee investors like SoftBank, Sequoia, and at the peak reached a valuation of $32 billion. In 2021, CZ exited his investment in FTX and received funds back in FTT, FTX's own crypto token. So far, the story looks absolutely stunning. With this, Fortune magazine had a cover page with SBF, stating the next Warren Buffett. Before we learn about how FTX went from $32 billion in valuation to bankruptcy, let's first understand what an exchange is. An exchange is a place where people buy and sell their securities. For example, New York Stock Exchange is a place where people buy and sell stocks. A seller comes to sell his shares and buyer comes to buy shares. NYSE merely helps them execute this transaction. NYSE neither uses its shares nor its money to execute this. They probably charge a fee to execute this transaction. So let's say someone wants to sell Facebook shares, and in last year or so the stock is down more than 50%. NYSE has no impact of the Facebook stock price, as it only helps to buy and sell the stock. With this, we are ready to understand the FTX collapse. We have 5 entities listed here. FTX Alameda Research, buyer, seller, and their wallets. Remember the New York Stock Exchange example. In this case, customers would use FTX Exchange to buy and sell cryptocurrency. FTX provided a wallet where buyer would deposit funds to buy crypto, and similarly seller would get funds after selling crypto. Apparently, Alameda Research is run by SBF's girlfriend. Alameda Research trades in crypto as well. In early November 2022, CoinDesk published a report stating Alameda Research had $5 billion of FTT tokens. The relation between FTX and Alameda Research was always a black box. But with this report, it appears that Alameda Research bought FTD tokens in a very large volume. This could have been done to stabilize FTD token price. Now the question arises, where did Alameda Research get $5 billion to invest in FTT? By this time, word was out about something fishy happening at FTX. Binance CEO, CZ, decided that due to corporate governance issue, he would liquidate $500 million of his FTD tokens that he had received for his stake sale in FTX. This news shook the crypto world. FTD token price moved from $25 to below $5 in a matter of hours. Everyone started withdrawing funds from FTX wallet. With the New York Stock Exchange example, we know that any price drop or withdrawal of funds has no impact on exchange. So FTX should be fine if they ran as an exchange. But soon FTX stopped wallet withdrawals, stating liquidity concerns. This would only happen if the wallet funds were moved somewhere else. The crux of story is, it is argued that Alameda Research made some risky leverage bets in cryptocurrency and lost a lot of money. In order to help Alameda Research, SBF moved customer wallet funds from FTX to Alameda Research. The story is still unraveling, but the greed will always supersede self-regulation and will result in blow-ups. Hope you had a great learning experience. Signing off from Intelligent Investor.